Every day of our lives, we're on the verge of making those slight changes that would make all the difference. Mignon McLaughlin. My friends, what does that mean? That means spending the 10 to 15 minutes we ask from you each and every day the market is open to follow these charts. You don't have to do a lot. Just follow them. Make simple practice trades. After you've done paper trading for a while, switch over. Just buy one share or a fractional share if it's something like the S&P 500 that goes for $443 a share, maybe just $100 worth. I love the $100 because that's easy for you to see if what percentage you're making or losing. And again, don't want you to go out there. Don't spend real money. Don't go out there and start buying thousands of dollars worth of stocks or even worse, options. It'll kill you, my friends. There are experts in the market that are in the market every day and have been for years. And if you're just starting off, they will take all your money. It's like sitting down at a table in Vegas with sharks. They will burn you. We want to take the gambling out of this. We don't want it to be gambling. We want you to know what you're doing. So let's jump into these charts. Very important that we pay attention to how we ended this week on the S&P 500. In fact, everything down for the day but gold. S&P 500 down 1.55%. Let's zoom into that weekly chart. Look at that. That is pretty much a doji there. And of course, it's below our prior trend line. Not much of a trend line, only 2 weeks. But of course, you can see in this first week of a green up move, we had a higher than the past 2 week or the prior 2 week. The subsequent 2 week highs. We see where it popped up to a high of 453.67 last week. The high was 451 this week, 451. I think it was 06 last week and 08 this week. So again, just a 2 cents higher. So as we look though, it's important to see how this was dying almost from the beginning. Now, look at this super high volume. I've got an analysis I'm going to share with you after we go through all the charts toward the end of the program. It'll take a couple of minutes, but it's going to be invaluable to you. Also, you'll see in the show notes, for those of you who are subscribers, you do that for free at chartingwealth.com. Sign up. We email you every day. You get our trainings each day. You get our little email that has the video of the day's review in it and the weekly review and forecast at the end of the week. And I also make sure today I'm sharing the volume analysis that we have for you. It's based on Jesse Livermore's methods of using volume with price. You'll get a lot out of that. At the end of the video, for those of you just watching the videos, you'll also see our volume analysis video that you'll get a great deal out of. Those of you who are subscribers, you can do both over the weekend. You can watch the video and you can read what I'm going to be including in your show notes in the email. Now, we see, of course, a doji at the end of the week dropping through. High spike in volume is significant. Doji is significant as to where things might be going over the course of this next week. Let's look at how that weekly doji compares to the rest of the charts. Look at the on the S&P. Look at the 2-day chart. Again, we're using this weekly trend line on both the 2-day and the half-day. We can see first day of this latest 2-day candle dropping below the trend line, and you can see where things spiked down in the morning and in the afternoon on the half-day. Look at that high volume. Interesting. Look how high the volume is just the first day of a 2-day candle. It's already about, 3/4 of the way or more up. So that's significant. We'll explain more as we go through at the end of the training. Now, look at where things are on the NASDAQ 100. Not as iffy as the S&P. We can see that we don't have a doji. We have a spinning top. We didn't have a spinning top last week. We had just a regular candle. Although neither of these weeks did we reach the high of the week beginning the 28th of August. That's showing us, again, a diminution in that growth. The volume's right at average, but it is higher than the prior 2 weeks. It's lower than the spike we saw after we reached that bottom on the week beginning the 14th of August. This was the week beginning the 21st of August where we saw that spike. But it was interesting that it didn't happen with a lower low. It was a little bit higher low. So again, that tells us a lot too. And volume analysis, along with Heikin-Ashi candlesticks and trend lines, I think is the key to understanding better than most, if any other technique, what's really going on, and not making it super complicated, but understanding what the investor sentiment is, what the insiders are doing. Now, as we look at the other candles, we can, of course, see here. Let's open this up so you can see it a little better. You can see again where we had two two-day candles trying to move up again, spinning tops. And then this latest, first day of this latest candle, lots of movement back and forth, down 1.71%. Of course, still in the red there, hasn't tapped us out yet. We go back and let's go down to the half-day chart. And of course, you can see where things had moved up back on Thursday. And then, of course, hammering down, like I said, 1.71% on Friday. So again, weren't excited about these moves at all at the beginning of them. Let's move on to bonds. The only thing, let's see, bonds were also down. It's gold, the only thing that's up. Bonds down 0.61%. Again, haven't been excited about bonds since we sort of watched everything peter out as we started getting into about what, April, where things, well, actually March, where things sort of popped up and then died and up a little down, and then a green candle in here and then down, a couple of green candles down, green candle down, green candle. I mean, bonds have tried to get some energy, but they keep dying, but they're not giving us reliable candlesticks on that weekly chart to be able to trade. Was hoping with this latest strong move down with all that volume, we were going to get a nice long move down. We did capture a good profit in there of 2.45% when we saw things head over and move down. But again, no good staying power, no nice run up. Things just sort of haphazardly tried to run up and then died again. So we're hoping to see a pattern emerge, but nothing exciting us right now. We can see on the 2-day chart, we're below the weekly trend line. Same with the half-day, and just some movement underneath here, peaking up and moving back over on the 2-day. Nothing exciting or interesting. No weekly trend to really get us involved. Nothing like we've seen in the past, say, with the S&P 500, where we have to go back over a year until recently to actually find, a crappy fake out. That was back on the 31st of May, 2022. Here lately, this last move has been not a good one. But again, once a year, if you have a stock or ETF that gives you great tradable moves throughout the year, and maybe once a year you have a fake out, not a problem if you use the proper loss limit techniques that we teach with the always winning formula. Now let's move on from bonds, go to gold. Oh, this is rather disappointing. I've been wanting gold to just take off, which it did. Back in, let's make sure we're on the weekly chart. Yes, back in March, popped up nicely, sort of got a little sloppy here, tried again, then of course down, tried to pop up here, died down, didn't keep trundling down, didn't even let us, it didn't even let us get out here. It got really close to our getting out point and then popped over going up for 2 weeks and now dying again. It's fallen out, as you can see, of the weekly trend line. Just here lately, for about everything, it's just been sloppy. Why is that? Because the market hasn't determined which way it's gonna go. And we have to just keep our powder dry and wait for it to tell us. We can see as we ended the week, we have seen the 2-day drop through the weekly trend line and the half-day, and they're both still below. Now, let's go to Bitcoin. Down for the day, 0.92%, not quite 1%. As we look at the weekly trend line, we've ended with a doji. Still a little red. Not sure quite what it's doing. The 2-day has pushed through the weekly trend line, as has the half-day. Are things going to start taking off again and moving up? Well, if we saw really high volume here, I could say maybe so, but we don't. We don't see that. We had average volume the last 2 weeks, but no lower lows. So again, if we look at where we were last week, the low last week, 24.69. This week, 24.29. So we actually went lower with a doji, but no high volume. So it doesn't tell us just what's going on. It just sort of tells us, hey, you didn't have a whole lot of movement. You didn't have a whole lot of volume. That's understandable. It's when we see those anomalies that we pay attention to things. And now that we're at the end of the show, I'm going to tell you how we analyze what we see this week on the S&P 500 for those of you who have stayed with us. This is something I would encourage you to do with your own notes at the end of every week. We also talk about midweek, sort of kicking back, looking at how the week is developing on Wednesday evening, at what's happening with the weekly candle midweek. You can do it then, you can do it at the end of the week, however you want to do it. I like doing it on Wednesday because then I can get ready to potentially trade on Friday if I'm seeing something real. Now on Friday, when you get to the end of the week, it's not a bad thing either to sort of see how the new week is setting up for you. But here's the analysis. Now, don't forget, in technical analysis, Heikin-Ashi candlesticks are used to better filter market noise and provide a clearer view of the market trend. But it's important to note that no technical indicator can predict market movements with certainty. And it's often best to use these indicators in combination with other forms of analysis. And of course, we do. We look at the Heikin-Ashi candlesticks, we look at the trend line, and we look at the volume. Now, let's look at how things set up going into this week. We had 2 weeks of green spinning tops with lower than average volume. You see that right here. There's the week beginning the 28th of August and the week beginning the 5th of September. And again, that was a shortened week because of the holiday. Look, we have lower than average volume there. This black line is our volume line. So the green spinning tops indicate and suggest indecision in the market, but lean toward a bullish sentiment since they're green. However, the lower than average volume can also imply a lack of strong conviction among buyers. In this scenario, traders and investors are neither able to push the price up significantly, nor are sellers able to push it down. Now, when we compare that with what happened this week with this green, it's just a little green doji. Well, this little green doji with higher than average volume represents also indecision, but it can be seen as a sign of a potential reversal if it appears after a trend, which it is appearing. That's a short trend, but the higher than average volume on this doji might indicate increased trading activity, possibly signaling that traders are reassessing their positions. The price failing to reach as high as it did in prior weeks could also imply that the bullish momentum is waning. How do we interpret this? Well, the appearance of the doji after 2 weeks of green spinning tops might be seen as a warning signal that the bullish sentiment is weakening. The higher volume during the doji week could suggest that this indecision is significant and should not be ignored as we move into this next week. Combined with the fact that the price didn't go as high as it did in prior weeks, these signs could indicate a potential trend reversal or at least a slowdown in that bullish movement and momentum that we have seen over the last couple of weeks. It wasn't a significant change and turnaround. We didn't have any high volume to start it to begin with. As you can see on the volume, starting on that first week of the turnaround back on the 28th of August. So what do we do? What are our action steps this next week? We want to be cautious. Given the status of a potential trend weakening, it may be prudent to exercise caution, particularly in taking any bullish positions, absolutely, and watch for confirmation. Look for other confirming signals in subsequent trading periods as we start this new week, such as bearish Heikin-Ashi candlesticks with high volume to validate the observations. So that's what we're going to be doing over this next week. We're going to be seeing if this doji with this high volume is portending an end of this short 2-week up move, and we're getting ready to see the markets jack back down. Heikin-Ashi candlesticks are all, and particularly the dojis there, really are helpful in us seeing what's actually going on. And with a doji, lots and lots of indecision. And with high volume, you've got somebody buying everything that's being sold. So that's interesting. Either you've got insiders thinking it's going up or it's going down. And again, as things are being sold, they're being bought. So again, you're having everything sort of end where it began. Important to understand that. Pay attention to it. Please take those trainings that you will see, the one at the end of the video today and the one in the email that all our subscribers get. And again, you can subscribe for free at chartingwealth.com. If you're not doing that, you're missing out on all the good free stuff. That list is never spammed, never shared. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters. If you appreciate what we do, become a Patreon supporter. First thing you get is Options Made Simple, the Charting Wealth Way 3-part series. If you want to learn options, cheapest, best way to do it, I think. God bless.